Now to news making headlines in the corporate world. The Competition Authority of Kenya has approved the proposed acquisition of 10.13% of the issued share capital of I&M Group PLC by East African Growth Holding unconditionally. The Competition Authority of Kenya says the approval has been granted based on the finding that the transaction is unlikely to negatively impact competition in the market for commercial banking services, nor elicit negative public interest concerns, the two key considerations during merger analysis. Here are the details of that story and more.
East Africa Growth Holding is a limited liability company incorporated and registered in Mauritius. It does not have operations in Kenya. However, it is affiliated with Africa Invest, a private equity investor that has invested in more than 200 companies across 35 African countries and in several sectors. On the other hand, I&M Group PLC is licensed by the Central Bank of Kenya as a non-operating holding company whose shares are listed on the Nairobi Securities Exchange. The proposed transaction involves the acquisition of 10.13% of the issued share capital of I&M Group PLC by East Africa Growth Holding from British International Investment PLC, which is one of the existing shareholders. Meanwhile, the Central Bank of Kenya has licensed 19 digital credit providers. This brings the number of licensed digital lenders to 51 following the licensing of 32 digital credit providers announced in March last year. The central bank says it has received 480 applications from digital lenders for licensing since March 2022 and has worked closely with the applicants in reviewing their applications. The licensing of digital lenders was precipitated by concerns by the public about the predatory practices of the unregulated digital lenders, about high costs, unethical debt collection practices, and the abuse of personal information. Finally, the proposed Investment Promotion and Facilitation Bill is expected to streamline the coordination of investment-related matters in Kenya. The law emphasizes simplifying administrative procedures, enhancing transparency, and reducing bureaucratic obstacles. The bill proposes the establishment of a digital One Start, One Go for investment facilitation, which will provide a streamlined and efficient process for obtaining licenses, permits, and approvals. Additionally, it will introduce a comprehensive investment incentives framework to attract and retain investors in priority areas.